So rising expectations of a December rate cut drove US stocks higher across the holiday shortened week, with tech stocks leading the charge. Meanwhile, the US dollar is set to fall 0.5% this week in its worst weekly performance since mid-October. But what should we be watching for the coming week? So let's start with market conditions. And with the return from the US Thanksgiving holiday, Monday will be the first full day of trading since Wednesday. So volumes and liquidity are expected to start returning to the market. Obviously, there was the CME outage that was experienced today, Friday, but that should be firmly in the rear view mirror by the start of the week. I think risk appetite returned last week amid a return to the softer data is good news stance, and it sort of lifted those Fed rate cut expectations. And I think we'll be watching to see whether this continues for traders as they return to their desk, given that this week coming is a pretty big week as far as US data points are concerned. So what I'll be watching, US equities. So you've got the S&P 500, the Dow Jones, the NASDAQ, the dollar as well. These are all, assets that are closely tied to the expectations surrounding the Federal Reserve and the US economy, as is gold. And also, I think, just keeping an eye on stocks that are still linked to that AI trade, particularly Google, the Alphabet, the parent of Google, will be one to be watching, as well as the Japanese yen, US dollar, Japanese yen, and oil. So just turning our attention to themes. Now, this week is the coming week, should I say, is the first week of December. So, just thinking about seasonality, December is a strong month for stocks. On average, the S&P 500 has gained 1.5% in December since 1945. However, it is worth noting that seasonality is usually supportive in November, and that hasn't been the case this month. We've got the S&P 500 down around 0.4% as we head into the last day of trading. But what is important here is to know, I think, that seasonality is a trader's friend, but it's not necessarily an absolute. Just something to keep in mind. Now, Fed rate cut expectations were a key driver last week as we had that sort of weaker data, particularly retail sales, consumer confidence, and that pushed rate cut expectations to 85% for December. That was up from 30% just 10 days ago. As I mentioned, there are plenty of data releases this coming week to keep the market focused on rate cut expectations. And if we do see rate cut expectations pick up further, that could help support risk sentiment and keep pressure on the US dollar. Another theme to be watching out for, and it's one that's really, stuck with us now for quite some time, will be that whole AI story. Looping back to seasonality here, I think November underperformed as we saw Fed rate cut expectations drop sharply before recovering at the end of the month. But we also saw the market grow nervous towards big tech and the AI trade. Now, last week, the mood towards AI and tech shows signs of recovery, and the NASDAQ actually outperformed the Dow Jones. I think, AI stories and developments will continue to influence the market in the coming weeks. Should that uncertainty surrounding AI payoffs, circular financing, and monetization ramp up again, then that could limit the market's upside in December and hold back that sort of normally positive seasonality. But conversely, optimism surrounding that AI outlook could actually pave the way for another strong end to the year and potentially more strength to the AI trade in 2026. If we just have a look at like Google Trends, that does show that AI remains front and center, and this fear of becoming obsolete in AI, I think we'll keep spending high across corporations and governments and big techs, and this could potentially signal another significant build-out phase in the coming year. Finally, on themes, I think Russia, Ukraine, peace talks, any sign of progress from both sides. There has been sort of some shifts, it feels, towards improving chances of a peace deal between the two sides. But I think it's also important to realize that, this could stop and stall at any time, as we have seen in previous occasions when Russia or Ukraine could pull back. And so the timing on this isn't necessarily that certain, but I think it is still relevant for the market. Obviously, you've got the ruble, which we need to be paying attention for, but also oil prices. Now, oil has fallen for 4 straight months, mainly to do with concerns over a supply glut in 2026. But if we do see this peace deal agreed between Russia and Ukraine, that does mean that sanctions on Russian oil could be removed or at least watered down. And that could mean increased supply, which would be and downside pressure for oil prices. Also, the euro could be an area that could benefit from a peace deal. Any sense of peace on the doorstep of Europe, of the Eurozone, is going to be beneficial for that currency. Just finally, let's have a look at event risks for next week. Now, this weekend, we do have the OPEC meeting on Sunday, another reason to be watching oil, although I don't expect OPEC to be changing the current production schedule. They did say in the last meeting that they were going to leave output production unchanged for the first quarter of 2026, and we expect them to stand by that. As far as Monday is concerned, big events as far as China is concerned. We've got the manufacturing PMI. Obviously, manufacturing is a huge part of the Chinese economy, so we're watching very closely to see how that performs. Also, manufacturing PMIs from the US and Canada. The ISM manufacturing is from the US. Now, this will be watched really closely. Just, obviously, Trump has had a very big focus on getting manufacturing back to the US with these tariffs. Is this playing out? Are we seeing some strength return to that sector? Also, Powell is speaking on Monday, but he's not expected to address monetary policy, so not something that we will be necessarily expecting to be market moving. So then Tuesday, we've got Eurozone inflation. The ECB are not expected to be moving on interest rates anytime soon. In fact, the cutting cycle from the ECB is expected to be over. So, the data will be watched, but won't necessarily be massively market moving, given that inflation remains close to that 2% target. Also have Japan's consumer confidence, really just keeping an eye on Japan, given the change of the prime minister a couple of weeks ago, and how that sort of situation is unfolding, in the sense that we've got signs of sticky inflation. We've got concerns over the fiscal position and fiscal confidence in Japan, and that you've got the Bank of Japan, who may be starting to show signs of looking to hike interest rates in December. So really keeping an eye on what's going on in Japan. As far as Wednesday is concerned, the events to be watching out for: Australian GDP, we've got Chinese services PMI, also got US ISM services, as well as ADP employment change. This ISM services is going to be really important to be having a good idea of how the US economy is holding up, as that US government has returned. And, amid concerns over there might be a little bit of a slowdown happening in the US economy. So that will give us some key gauges, particularly as the services sector is so important to the US economy. Thursday, US calendar job cuts. Again, more information on the US labor market, which is being watched very closely by the Federal Reserve. We've also got US trade balance and Japanese household spending. And then finally, on Friday, RBI rate decision, Canada employment. We don't have US non-farm payroll. This was when we would be expecting it, but because of that US government shutdown, that will not be released. But we do have US core PCE. So this is the Federal Reserve's preferred gauge for inflation. And given that there's been this sort of, way up between policymakers over what's going to be more important, the slowdown in the US economy or a potential stickiness in inflation, this is going to be a metric that we'll be watching very closely, as well as US consumer confidence. Just this week, we saw the Conference Board consumer confidence actually fell to the lowest level since April. So we are seeing concerns starting to show up in the consumer confidence indices regarding the outlook to their position, particularly as the jobs market starts to show signs of slowing. So that is what we will be watching for the week ahead. For more videos like this, please do like and subscribe.